for different purposes. That is for taking profits or to identify what probably the range could be for the next day. So we are going to just look at that particular concept also. So now you are familiar with volume based. We have already discussed about volume based analysis, price volume basis, and this we have discussed in previous webinars also. That is to what extent volume plays an important part, and how we should use volume along with price to identify trend and breakouts. Similarly, the case with time also. So we have looked at volume, price, volume, time analysis before. Now another important parameter is the open interest. We will just look at what open interest is and use the present open interest data which is available for in Nifty, Bank Nifty, both for weekly as well as for monthly, as well as in stocks, to identify to what extent probably the market can go down or go up. Now open interest is nothing but the cumulative long or short. You add all the long position or you add the short positions. Okay. So either the long or the short on one side, if you do that, that is called the open interest. That is basically that how much of quantity is left without being squared off. Okay, that's the very lay understanding of open interest. That is, so much of quantity remains that is open. That is so that much of quantity is left which is to be squared off. And open interest normally is looked at it from the position of an option seller position. The reason being is options are normally sold, because open interest, when we're talking about, it can be for futures, it can be for options also. But option open interest is because of the different strikes which are present in options. So the open interest for each strike will tell us to where the support and resistance can come. And the reason why we are looking at open interest is normally short sellers are considered to be smart traders, because there is considerable amount of risk as far as shorting options is concerned. So those who are short options are considered to be resourceful hands, and hence that particular level, if they have sold already at that particular level, that means it's quite clear that probably they don't see the market going below that particular strike or above a strike. Now they will, since they are resourceful hands, they may even defend that particular level, that is prevent the market from sliding below that level. That will depend to what extent, to how big they are, and what is their future interest also, because the interest can keep changing, because they may prefer that some other levels, so they could just shift that particular position to another position. But at least at this point of time, at least we will know to what extent the market probably can rise or slip, and where probably the important levels of support and resistances can emerge. So we will look this with the help of an example. But initially you can understand that open interest, when you look at the website, particularly we can go to the NSE India website, we can look at the open interest, probably combine this along with the chart analysis to get a feeling of how good open interest is in that particular place. For example, when you look at the this one, that is let's look at the chart. Now this is the Nifty chart, right? So now we will look at the daily chart in Nifty. So this particular the market rose from this level, right? So this is the 14,222. So 14,200 normally we should look 14,200 as a very important support, and break below that probably can take it a little lower. So 14,222 will be looked as, if it's going to be looked at from the chart position, if you are going to look at 14,200 approximately as an important support, let us see whether that particular 14,200 is being confirmed through open interest. That means if there is a greatest amount of open interest for the month end, we look at, since this week has expired, so there's only 1 week left, so there's also a month end option. So for the month end option, if that also happens to be the next weekly expiry. So the weekly expiry and monthly expiry, if the open interest is as highest at the level of 14,200, then we can, when we read it along with the chart, we can confirm that as a very important support level. Now, for those who are not understood the chart in terms of the bar chart or other related thing, just go to the information on open interest. We can go to nsindia.com, look at the option chain, and in the option chain you will have different strikes, and in those strikes look at the open interest position, and those strikes which have the maximum amount of open interest you can say as a support resistance, and in the case of a put, if the open interest will give the support point, and in the case of call open interest position, the maximum call open interest position of a particular strike will tell you where the resistance is. Now, as we have identified 14,200 levels, now the recent high is the 14,750 levels, right? So around 14,700 to 14,800 should have the greatest open interest. So that's what the charts tell us. So we will look at the NS India website and confirm this one. So you should the understanding is open interest is nothing but the cumulative long or short positions, and those positions are yet to be squared off. So every day the open interest can add. So if at all we have to look at the volume, we have to look at the open interest, we have to look at the price. So if the price rallies and the open interest also increases, okay, then in that particular case, and also volume also increases, then there is great amount of strength in that particular rally. Okay. Now, if the open interest position gets dwindled along with the volume, then that means probably the more amount of positions which were earlier sold are getting squared off. Okay, so that can indicate probably whether they are pushing that particular open interest to some other strike. So some other strike will become an important support or resistance. We need to see and then understand it along with the market. So we should not read open interest without reading the price. And price along with volume and open interest will give us sufficient information. So now we will look at the example in Nifty. We'll look at the example of as far as Bank Nifty also is concerned. So we'll go to the NS India website. So NSE it's not here, so we'll look at the so unfortunately we are not getting it today. We don't have the Nifty here. They are not lifting the Nifty futures. Previously in the last website it used to be there. So let's look at the so fortunately it's equity stock. So you're not getting that. I think it's an old site which used to give much better information. So we'll just look at it again. Let's see. So Nifty, uh, okay, so we have got at least some information. So we will just look at this particular information now, and just see the. Still, it's not clear for it to explain. So we'll just look at the derivatives. So we are not getting this particular information. So let's wait for whether we in some other this one you are getting it. So we are not. Okay, so index options right now. Let's look at the open interest in terms of quantity. Now we can see 14,600 call is going at 50,628, 50,628. Then 14,700 call, it's 51,892. So the call right now, the maximum open interest right now is on 14,700. Then 14,600. That shows very clearly that this is what we looked at the chart also. So the chart also we found that 14,700 is a very good resistance level. So right now it from the open interest also it confirms that 14,700 will be a very important resistance area. So let us look at the put side. Now if you look at the put side which is there, so I will read it out for you because it is in the white screen and we can't help it there. So in the case of put side, see 14,200 put right now. It has got this is all this expiry date is 28 January. So 14,200 put is 25,141. 14,000 put is 45,320. So that shows very clearly that we have got maximum. So here of course 15,000 call also is got, but I think that is quite far off. So we'll not consider that first. We'll consider those which are very quite nearby to the present right. So 14,700 in call is of a very high thing, and here is 14,200 and 14,000. I think these are the two maximum put options on the lower side where the open interest is very high. So from this very clear that 14,200 will be an important support, and 14.6 or 14.7 is going to be a most important resistance. So this is clearly identified with the help of the open interest, this one. Now we can just look at the change in the open interest also. That is what we saw some time back. So how much of change that has taken place in the open interest also, will give us some indication. Now, along with that, I told you, look at the volume also of the trading that is taking place. Look at the volume in case of 14,200 put is 5,29,800 today, and in the case of 14,000 is slightly lower, around it's around 4,31,654. So the volume also says very clearly that these volumes we should count it towards strong resourceful hands who are selling the options of 14,200. So that means the maximum volume is now coming at 14,200 and then comes at 14,000. But open interest is slightly higher than at 14,000. So we have to presume that the first support will come at 14,200 and second support as far as the Nifty is concerned, it is likely to come at 14,000 for this month. Not necessarily it means that probably it will fall to this level. It only says that these are very important levels. Not necessarily it should fall. Similarly, when we say 14,600 and 14,700 as an important open interest, it does not mean that it will not be penetrated. It is only an indication that as 14.6 and 14.7 are important resistance and 14.2 is going to be an important support. So you can frame your strategies based on the proposal that for the next 1 week, Nifty can just over between 14.2 and 14.7. Now it closed today close to 14,400. So what you can look at it is whether it can close between 14.2 and 14.7. And anything above 14.7, probably when it gets penetrated, because the short sellers are more in 14.7, there will be a squeeze around 14,700. So the moment 14,700 is broken, you can see a lot of short sellers trying to cover up positions. And in that particular case, the momentum will start building up, and so the breakout can be much better. So another important thing with the open interest is, if these levels are broken, then probably those who are sold heavily at these levels, whether in the case of a call or a put, will come to cover these positions, which can give more impetus and momentum towards the breakout. So a 14.6, 14.7 breakout probably can take the market higher, much higher. And 14.2 breakout means probably we can see as fall up to 14,000, and a further break of 14,000 can create much more momentum on the downside. So this is the information that we get based on the open interest. Now the same thing you can look at what happens as far as Bank Nifty is concerned and make a decision even before you go to the this one. That is, if you look at the Bank Nifty, Nifty bank options. So this is Nifty bank options, and even before we go to the site, so let's look at which one which has got more open interest. Now see on the put side, 31,000 put has got open interest of 27,744. Then if you look at the ones which are greatest, it is on the call side, you can see the greatest open interest is first coming at 32,500. So 32,500 and approximately even 32,000. So 32,000 and 32,500 are going to be important resistance, as can be seen from the open interest on the call side. The resistances can come very closer between 32,000 and 32,500 according to the open interest. And similarly, the maximum amount of call put open interest is coming closer to, if you look at it, it's 30 put on the put side. We have 30,000 put, 30,000 put and 31,000 put. So 30,000 and 31,000 put are holding the ground. And let's look at the chart. And let's see what probably we can look at the Bank Nifty. This is a problem, I think. So this is Bank Nifty, and yeah, today the Bank Nifty fell quite a huge amount. It came down closer to 31,167. As per the open interest, 31,000 is an important support. So a failure below 31,000 probably can take the market at a much lower. Now this low is coming at 30,893. So probably 30,900. So we can expect the next support to come very closer to 30,900. And can see probably the Bank Nifty bouncing back. This is as per the chart is concerned. So the same thing when we read it along with the open interest, because normally the selling off will take place almost in rounded figures because of the liquidity. So when they talk about 31,000, they will sell at 31,000. Probably if it starts going below 31,850 or so, I think there can be a lot of unwinding of that particular trade of 31,000 short positions. Till that time, 31,000 short positions may not be unwound as long as this particular low is breached. Now similarly, when you look at the one which is the highest open interest is now coming at 33,000, and this is 32,839 is the high. So it's reasonably confident right now based on the charts as well as based on the open interest. It is a market which is likely to be between 31,000 and 33,000 for the remainder part of this particular week. We have got only 4 trading sessions because of the Republic Day holiday. So this is how you use the open interest to look at the case of support and resistance, and when you read it along with the chart, you get more comfort, because basically you use various tools in order to derive comfort of and also an understanding of the support and resistance levels. So open interest is one such tool along with your normal technical parameters. Open interest is another because we have said that the breakout should be considered along not only in terms of price but also in terms of the volume. Similarly, when the open interest, wherever the high level of open interest remains, if that is broken, then you can expect further momentum to be on the upside. Let us say 33,000 is broken, then further momentum above 33,000 can be expected. So now this is 31,000, 33,000 as far as Bank Nifty is concerned. So this is how open interest is to be thought of. Now we will go to the next discussion, that is the volatility. Now volatility is, we have understood volatility previously also. It's just a movement, right? So how much it moves per day. The question is, then you say that particular stock is volatile. Now for example, you have now been used to say commodities where crude is there, then probably silver, gold. So you know how to rank the volatility, because the crude moves up much higher in a particular day. The percentage of movement in crude is much higher probably when compared to gold. So you always consider crude to be more volatile than gold. So if you look at the Nifty and Bank Nifty, generally Bank Nifty is considered to be more volatile than Nifty because the percentage of movement as far as Bank Nifty is considered to be higher. If you look at some stocks, probably you'll also get a feel that certain stocks are much more volatile and also much more volatile during certain periods of time. For example, let us look at Tata Motors right now. So Tata Motors right now is behaving very, very differently from the Tata Motors we saw a couple of months back, and from the rally that has taken place from almost 200 to 290 has been a very breathtaking rally that has taken place within a couple of sessions. So there will be sometimes when the volatility ebbs, and sometimes the volatility expands in a very significant manner. So the stocks are more unpredictable as far as the volatility is concerned. Index and bigger assets like gold, crude, dollar rupee are a little more predictable when compared to the volatility. But what we have seen even in the case of Nifty in the last 2020 until now, I think the fall and the rise both have been extraordinary volatile, in the sense that the data set of previous years have not been justified, in the sense that the movement has not happened as probably could have been predicted by any particular data set of the past period. To that extent, the market has been very volatile, both on the downside and both on the upside. So very largely we have to go generally with the trend, but and also probably use some sort of a pattern in order to take profit, which I have told you that if it breaks one day low, then probably you can take a profit, or you break a 3-day low, then take the profit. So you will have some way probably to decide about how to take profits. Now, and also how to use a trading stop loss. Now the volatility gives you information that to what extent a particular stock can move in a particular month, a week, or particularly a day. Now for which we have already explained that concept of average to range, and also using average to trend, there are indicators like super trend. I think one of those popular volatility indicators that have been used by traders along with moving averages. So we will not go into some of the indicators we have already explained to you before, but right now we will just look at the volatility from the point of certain stocks, and now we can use it maybe for predicting what probably could be the range. Now let us look at a particular script, ICICI. Now look at this particular stock. Of course, for the last couple of days, this particular stock has been, though it's range bound, but it is volatile within that particular range. We have some support coming in at this particular level. We have some support coming at this level. At the same time, some resistance coming at this level, right? So right now, it looks as if this particular level, which is 560.61, is a very important resistance, and yesterday also it went very close to the 561 and fell, and it now has come back to this particular level of 528 at 530. So 530 to 560 is a general level which is happening for the last 1, 3, 4, 7, 8 days. But if you look at a single particular day, today has been a very big day. This is a very big day. So sometimes it happens like this. Sometimes it can be a small day like this. This particular day it can be. So you will have to average it over a period of time. Normally they use a 14-day average in order to know the general range which is happening in the last 14 days. The reason why they are taking the last 14 days is the last 14 days will tell you whether the stocks will become a little subdued or the stock is in a big rally mode or in expansion mode, whether on the downside or on the upside. Now, if traders have learned to live with 14 days as well as for a longer period, because sometimes the 14-day period you use it could be of a smaller volatility, because those 14 days market can be for that particular asset could be a very subdued volatility. But after 14 days, probably if you use the same volatility, then probably it can tease you by having a much more expanded volatility. So the number of days that one takes for calculating volatility depends on each trader's understanding of that particular script. So generally they use an average range of last 14 days in order to estimate, to even out certain single day volatility, whether if it could be small or big. It is being averaged over a period of 14 days to give you some sort of an indication. So let us look at this, but otherwise also you don't need to go that ATR indicator you can use, but you can generally look at it. See, today, this particular day, it is an 8 rupees, 550 is the low and 558 is the high. 8 rupees is the low, and this is one of those small days in the last couple of, so 8 days is I think probably almost a minimum volatility. High to low is a minimum volatility. So we look at the minimum and maximum volatility in these periods. So these are two, see, this particular day and this particular day, these 2 days are extremely volatile periods. And if you look at this particular day, it is 23 rupees. So 23 rupees is happened today. And similarly, we have seen in this particular day also 488 to 14. So 27 rupees. So here it was a case of 27 rupees, and here it case of I think today is a day of 24 rupees. So 24 to 27. So the maximum is 24 to 27. The minimum is 8. So the average in these days could be something like 11 or 12, the average thing. And the moderate volatility days are like this. Say, for example, this particular day, it is 547 to 533. So 13, 14 rupees could be an average. Lowest could be 8, and highest could be something like 25 to 26, 27 rupees. So from this we will know what probably when the market starts today, then you can always compute that to what extent probably it could move from that. Or you can also look at what has been yesterday's close. So normally from yesterday's close, at least it has to now move by a minimum of 8 rupees or 24 rupees. Okay, 8 to 24 rupees compared to the previous day's close approximately in 8 days, because if you look at it also, the volatility can be measured in terms of this particular day's high or low, or in terms of yesterday's close was today's high, yesterday's close versus today's low. So that is also one way of looking at it. To what extent probably it can go up tomorrow. Let us say, you can say if it is going to go up from this close, it could be same 23 rupees, it can reverse and take back this particular high. That is one. The minimum that if it is going to rally can be something like 9 rupees, 8 rupees or 9 rupees. So it can rally up to 539, it can happen. Or probably another combination is it can fall from here by 9 rupees. From today's close, it can fall by 9 rupees minimum, or it can fall by slightly higher amount. So the question there is that we have to look at on a close to close basis also what probably can happen. The reason why we are saying this, once you know that particular judgment, let us say compared to yesterday's close, today's price movement can be something like 10 to 12 rupees. Let us say, you know that the minimum has to be around 10 to 12 rupees. So you can think about a strategy where probably you are buying a straddle. Let us say you are buying a straddle. In the sense that 10 rupees, 12 rupees probably can give you small profit, because you are looking at small profit without a loss. Chances that if it can expand like this, you will make more money. But if it does not expand, if it's only 10 12 rupees, if it does not expand much, then chances of loss also is going to be limited on intraday, because you are doing an intraday. And while doing an intraday, and you are doing it for some near week position, I say next week, let us say. Now that means if there is a good expansion like what happened today, then immediately the straddle can give you a profit. Like today morning, let us say, or yesterday's close. Yesterday's close is like this, right? Yesterday's close is like this, 553. So today morning, it just opened, let us say, full-blooded fall, and it opened at say 553. When it opens at 553, you know yesterday's is 553, and you are buying a 550 call or put. Now, if the 550 call or put, if you have bought, one side if it moves, other side also, one side is a profit, other side is the loss, because you bought a call and put. So for a very limited amount of movement, you will not get a profit, you will not get a loss also, you will not make. But once the range expands significantly, then you will have some profit. So that's particular thing. So what happens if there is a 20 rupees movement like today? Probably the straddle would have given you a profit. What happens if there is a very small range of like that and 8 rupees? Very high chances that you will break even. So when you are doing an intraday trading, probably you can look at that point also. That is to start. See, the question is, you should start on the day. Let's say even in the case of Nifty, even in the case of Nifty, the Nifty fell closer to something like 170, 180 points. So 170, 180 points when it falls, and the near position you take, then in that case there will be some profit that can come, because it is moving on one side significantly more than what probably the option is estimating it to be. So in a single day, probably the option compared to the previous day may be looking at something like 80 rupees or 90 rupees, because that volatility will decide. Now let us say Nifty has a volatility of 17 or 18% per annum. That means on a single day, that 18% can translate approximately to probably, let us say, 1%. So probably it is expecting a movement which could be 125 to 130 points. So if it is going to be more than 125, 130 points on either side, you are likely to make a profit compared to the previous day. Now, compared to previous day, but today itself when it opens, then in that case, you are removing the effect of the time decay of the previous day. So you are starting afresh. So except for the volatility, the straddle buying on that particular day, like today, Nifty it was 14,600 plus at one stage, and it was also 14,375 at one stage. It added 225 rupees. So assuming that at the open itself, you had bought a call, because most of the days between the high and the low, that is, if you know the range, Nifty has a range which is approximately, at least these days, it is more than 100 rupees in a single day. So the nearby strike, if you buy, and if the range expiry, that is near expiry, that is in the case of Nifty and Bank Nifty, you have a weekly expiry, right? So for that particular week, you let us say on Monday, Thursday expiry is there. So on Monday you buy a call or a put, which is let us say Nifty opens at 14,400. So you buy a 14,400 call and put buying of a Thursday, and it suddenly expands by 150 points, either it go to 14,550 or go to 14,250, highly likely chance that probably you may end up with some profit, because the one side call loss, one side profit of put, if it is going to be at the downside, or if it is going to be the upside, the profit in the call, the loss in the put. But put together, when the movement is huge, you will make money. Assuming that probably the range is not much, it's only 80-90 points, chances that you may make a loss is also going to be limited. So what you're looking at is, and someday the volatility will expand and will give you the profit. Okay, so for that you have to understand what, because the reason why you need to understand this, what is the volatility factor is, compared to the previous day, only if you know that it is likely to move by 100 or 150 rupees most of the days, you will know that on the morning, already if it has moved, let us say, because compared to the previous day close, the open gap or the gap up or gap down is already 150 points, then probably the chances that you may make profit will be quite limited, because already the gap and the movement that has to happen has happened in one single price jump that has taken place. But if it is not so, if it is going to open almost very open is very equal or slightly very closer to the yesterday's close, then the chance is that it has to expand to some extent. So the profit will come because of that particular expansion. And because the reason is, overnight to today, already the time decay would have taken place. Okay, in option, the time decay would have taken place when it is opening very near the close of yesterday. And from there, when the range expands, there's a chance that you will make a good amount of profit. So try this out, that for nearby this one, if the market opens very at proximity to yesterday's close, the previous day close, then you buy a call and you buy a put, and see to what extent, because you are directional neutral, right? You are directional neutral. Either way, one of them will have give profit, the other will make a loss. But what is there is that compared to the previous day, if the range expansion is going to take place, okay, so then in that case you are going to make some money out of that. Okay, from there the chances that you will make money. So that is one portion that you can observe by buying. This is a very finer point, and by doing this consistently, you will have some marginal profit. Okay. But if you will not make much of it, you will not make I think loss will be very insignificant. On some day when the market just suddenly falls by 200-300 points, you will have a good gain. So you can adopt this as an intraday strategy, that if at all, if any price opens very close. So for example, today Reliance opened, ICICI opened at 550 levels, right? It was very closer to yesterday's price. And when it was very close to yesterday's price, and this particular week, the coming week, you try the call and put, okay, at the same 550, 553 levels. So one side fall will definitely give you the profit, because the reason is, compared to yesterday's close, today's open is very closer to yesterday's close. So the time decay would have taken its toll immediately on that. Then after that, when the expansion takes place, you will make the money. After that, when the expansion takes place, you will definitely make the money. So you can try it out with that type of an option strategy to deal with it. So the reason why I'm saying the call and put is that, so as the market deteriorates, as the market expands in one side, the call, let us say the market goes up, then the call profit will keep on increasing, and the put anyway has to decay to some extent, and that loss will keep on coming down a little bit, and the call profit will keep inching a little higher and higher. And so there is a chance that probably in the case of Nifty, you may make some 10 rupees, 15 rupees possibility you may increase. So for a 75 units, you may make some 750 or 1000 rupees. If you make a loss, or if you make a loss also, it's going to be very small. It could be 2 rupees or 3 rupees. So you can make a try, you can make an attempt on that. So if you are profitable, then you can put huge amount of volume, because the amount chances of that you are going to make a loss or profit is going to be less. So that we will try to illustrate with some examples in coming week of how to adopt a straddle as a profit strategy on intraday basis, for which you should know to what extent the option the prices will expand. Okay. So now time is closer to 7:45. So you can ask your questions now. Thank you. So open interest, you can Google and find out various information on open interest and how to use open interest in your trading strategy. But this is something which is an added point with along with your chart of all those price analysis and other things you form. Open interest is another position, just for understanding purposes. Because as you improve your trading skill, it's also important that you understand the other aspects of trading, right? So there are no questions. So I think I will meet again on Monday with some interesting topic on fundamental factors which are affecting the market, then what probably strategy we should follow before the budget, and what are the factors which are influencing the market. We will touch base on Monday with that. So thank you and happy weekend. Thank you very much. Stay safe. Thank you.